Let's talk about the market, because there's some weird things happening. We got escalation in the Middle East. We got some crazy stuff happening geopolitically. But Bitcoin isn't doing too badly. And surprisingly yesterday, the S&P 500, the Nasdaq, and the overall markets were actually up. However, there is one specific market that's getting decimated right now that I want you guys to be aware of, and there might be some hidden opportunity that most of the market is missing out on. If we do jump into Bitcoin's price action, you can see we do have this triangle forming here. We were looking at this as more of a bear flag before, but as I told you, I didn't think the bear flag was actually going to play out. I thought it was going to be a fake out to the downside to trick people into short positions, and that is actually one of the main reasons why I opened that long position I shared with you guys earlier in the week. So I've now taken half of this position off the table. I'm actually very impressed how Bitcoin has held up throughout this turmoil, showing us maybe we're getting to the end of the bear market prematurely, but give me a second to get to why actually I think that's not the case. But I have closed half this position now, having 3 Bitcoin left in this trade, closing out over $20,000 of profit, realized profit, and having just under another $20,000 of unrealized profit right now. And I have about $18,000 of risk in this trade left. So that's exactly what I want to be doing, making best of these bounces, building up my cash piles to then buy Bitcoin, hopefully as it goes lower. Because I actually, counter to what a lot of people want in this market, I actually want Bitcoin to go lower. If we're going to have a bear market, which we're in right now, I want it to just be bad. Just get it over and done with. Be bad, let me buy Bitcoin at a cheaper price. And then just like history tells us, we go back into another bull market eventually. Maybe it's in 6 months, a year, 2 years, 3 years, we see the top, right? That's the general time frame here. So the longer we have in the bear market, the longer we have to generate cash flow, whether it's from trading like I'm doing, or from an income or business like some of you guys might be doing, right? There's many ways to do this, but what we want to do is we want to find the assets we believe in right now. We want to generate as much cash as possible, and we want to invest. And actually, ideally, we want these assets to go down, because JP Morgan are actually saying that there's a potential. JP Morgan says the S&P 500 could go down by as much as 10%. Right? This is a $4.8 trillion hedge fund or asset manager, whatever you want to call them. 10% down for the S&P 500. Now, us crypto degens, we don't care about 10% down. What's 10% down? Who gives a crap about 10%? Right now, it's been down 5%. Let's say it goes down another 10% from that low, right? A 10% from that low is actually where the S&P 500 started before the tariff crash. So this is why, guys, I say all the time, DCA is king. DCA into long-term assets is king, right? And I'll die on that hill. Maybe I'm wrong. I don't think I'm wrong. But guys, I DCA'd in that market environment, and now one of the largest asset managers in the world is warning, big warning, absolutely diabolical warning. The market might go down as low as before the crash, the last big market warning crash in April of just 1 year ago. It's really not that bad, right? But all of these news and all of these headlines, they are there to scare people. I'm not saying that bad stuff isn't happening right now. There is loads of stuff happening right now. It's not just in the Middle East. Literally, the whole world is going through some sort of pain right now. It's kind of crazy, right? One of the biggest markets that's been hit is the Dubai real estate market. Dubai real estate index right now losing 1/5 of its value in just 5 days. I personally am an investor into the Dubai real estate market, but this is another perfect example, right, of the opportunity and the benefit of being a long-term investor, right? One thing is that because I started early investing into Dubai's real estate market about 4 or 5 years ago, this drop doesn't actually affect my underlying value that I put into the market. So my own money that I put into the market. Yes, it drops my net worth. Yes, it drops my asset value. But it doesn't really matter, because I don't believe that Dubai is going to go to zero. Maybe you do, maybe I'm naive, but I don't believe that, right? But again, long-term investing protects you from these big, massive falls. And this could fall even more. It could go to my initial investment value. It could go lower. But I think that that will show, and even starting right now, it is showing opportunity. I personally know people right now that are buying Dubai's market right now. They're getting these deals, these distressed big deals that people are scared they're getting out of, and they're buying them up right now because they think that this is going to pass. Again, they might be wrong, but these are the people with significant amounts of money doing things in moments like this. So I really like to talk about these things because it's the same in every market. One, find assets that you believe in. You can listen to me yap, you can listen to other people yap, and that can give you ideas of assets for you to research. Sure, don't just blindly follow anyone though. Find the assets that you actually believe in. And then when opportunities show their head like this, yes, it's bad. Yes, there's bad things happening, but remove that from it and see these things as opportunity. This is an example of an opportunity. If you're a Dubai real estate investor, what you should be doing is not panicking, right? Because one thing is we all know where there's high risk, there's high reward, or where there's high reward, there's high risk. And that's exactly what we're seeing play out in real time. Just like Bitcoin and the crypto market, right? High risk, high reward. And then we see things like lower risk, lower reward. JP Morgan is calling for a 10% drop in the S&P 500. Lower risk, lower reward, but still reward nonetheless. So these are the assets, right, that I talk about every day because they're the ones that I've chosen. They're the ones that I've deeply researched. They're the ones that I believe in, and they're the ones where I put my money. So it's very beneficial and easy for me to talk about these things because it's literally where my money is. And I'm just talking about how I'm thinking about it and what I'm doing. And like I said, on this channel, every day, when the tariff crash was happening, I was telling you guys that I was deploying capital heavy. Right in this region, I was telling you I was buying Amazon. Right? And to make sure that anyone who's watching this who's skeptical about me and thinks that I only talk about things that win, I also spoke about buying BMNR at this price right here, about $40 right here, right? I've been buying it and I'm down heavily on this position, right? Not everything's going to work out instantly. But again, I believe, and again, it could be wrong, that this sort of thing will happen. Bear market might get worse, yada, yada, yada. And then we're going to see a bull market and this sort of thing happens, right? And I'll catch you guys in the next one.